back and look at the bear markets, well, just over the last 25 years, 2000, 2002, gold, silver, and the miners went up. 2007 to 2009, okay, up. They were an alternative. Yeah, sometimes you'll get an emotional week or two in the stock market where you get effectively a crash type event, though that's kind of rare in bear markets in the stock market. In fact, the 2000 to 2002, there was never a crash. It was just a bloody downside that was just constant. It was without a crash event. And in 2007 to 2009, there was 1 month in there in October 2008, a full year already off the high, well off the price high. You had a crash-like event. And at that time, gold, silver, and the miners all did have a sympathetic pullback. But in the context of the broader bear market, they were going up. For them, that was a corrective drop. And I think the recent example is pretty good. You know, look what gold did January through April. Well, stocks were puking, went up. You know, anyway, that's my view of the world here, and I think we're about to get back to a more dramatic behavior in the markets, both upside in the monetary metals and downside in the stock market. Once we convince the ever bulls that this time it's not going to do what you think. It's in fact more like the 2000 top to 2007 top, arduous, with teasing new high.
This time is not different. It's the same as all other cycles have to come to an end.
Yeah.
Then I guess there is a talk that there's so much liquidity, as you said, there's so much M2 being pumped into the market, and maybe that's going to keep.
Well, recently it started. If you look at the M2 chart, they've put the pedal to the floor. Don't worry about rates. What really matters is what the Fed doing with their money. And that bond market better not slip back off this rally and start back down again, because that'll really panic them. But once you get the negative data points, they're going to have to respond with rate cuts, or Powell's going to look like he definitely is playing a political game. Right now, he's playing an academic economist game. At least that's what he's saying. But once the data points start south, he's got no excuse anymore, in which case he's got to go put the pedal to the floor again, or retire with a bad name. But it's not just the rate cuts. It's a monetary policy. And I think that is already, looking at the M2 chart, something's changed. You know, for the last 9 months or so, this thing started to go vertical again. So that's what really counts.